So my name is Junice. I am the Director for Southeast Asia for a global sustainability consultancy called Corporate Citizenship, and then we specialize in advisory work with regards to sustainability. And that includes issues like sustainability reporting. We help companies in their assurance work of their sustainability management. We also help them in advisory with regards to material issues within sustainability. So that would include environment, social, and governance issues. So disclosure helps with regards to making companies more transparent and more responsible with the way they manage their practices on the ground. One form of disclosure would obviously be sustainability reporting, and that is the most common form of, I would say, disclosure for many companies today. However, sustainability reporting is usually done on an annual basis. It is a snapshot of what a company does at any one point in time, in that financial year. And also, the company has control over what it wants to say in the report. But at the same time, you'd have to make sure that they follow certain guidelines. And that is why international frameworks such as the Global Reporting Initiative or the UN Global Compact, 10 Business Principles, ISO 26000, are frameworks that companies today try to report against, so that they don't just disclose on their reporting, but also make sure that they adhere to certain guidelines where you can eventually compare your peer apple to apple against one against the other within an industry. That really helps, I would say, in terms of having more transparent disclosure. And of course, how it helps companies is that the NGOs or the academics or consumers, customers, even future employees, they are the ones who would be obviously reading about this disclosure, and they would be the judge in terms of whether or not they believe such disclosure would help them to make a decision whether or not they should trust the company. So I would say disclosure helps to obviously gain the public trust, and it helps in reputation. But obviously there are other benefits as well with regards to disclosure. It helps with access to capital. For example, when your investors and the banks are reading about your own disclosure, they at least have greater confidence that you are managing your own risks as well. So the Global Reporting Initiative, or they call it GRI, is one of the most widely used international frameworks when it comes to sustainability reporting. It's a little bit like what people consider an ISO equivalent framework. In fact, I think a study done in Singapore and even internationally, over 85% of companies today and organizations actually use at least reference the GRI in their report. So it's quite clear that they are by far the most widely used framework. Now, so the GRI it has universal applicability, which means that even if you are, say, an airport, or you are a media house, or you are even an academic, for example, if you wanted to report on your sustainability management, you would use the GRI framework. It is versatile in a way where it follows the principle of materiality, is obviously the underlying basis, which I will explain later what materiality means. But they focus on environment, the social issues, governance issues, as well as economic issues. And under these issues, they obviously talk a little bit more about what they would like for companies to report on. So materiality is a principle where an organization would report what is important to its stakeholders against what is important to its business and its senior management. When you plot that against a graph, you would have what we call a materiality map, and the top right-hand quadrant would be the issues that I would say is most important to both axes, therefore both sides of the stakeholders. But when it comes to GRI, the issues that you can't run away would be environmental issues. So are you protecting biodiversity? Are you minimizing the amount of carbon that is being released from the, or rather we call it, carbon emissions from your activities? That would be one very significant issue. The other obviously would be your management of your labor issues, so social issues as we talked about. So SGX launched their Comply or Explain ruling last year in June, and that mandates that all listed all listed companies on the SGX would have to comply or explain to sustainability reporting. This means that every year they would have to issue a sustainability report following SGX's 5 guidelines, which I'll talk a little bit later, and they would have to do it within 5 months of the end of their financial year. So this is quite a big change because many companies are actually not used to reporting on their environment, social issues, and suddenly having to be thrown into doing something that are not used to obviously sends a little bit of a shockwave to many organizations here. The issues that they have to address, as I've mentioned, the 5 components are such. The first is they would have to report their material ESG issues, or material environment, social and governance issues. The second one is they would have to report policies, performance, targets of these issues. The third one is they actually need to set targets for the future as well. So, and not just qualitative targets like I want to reduce my carbon emissions, but a little bit more specific quantitative data. The fourth is they have to follow a framework. At least they have to say what framework they're using, for example, GRI or ISO or something like that. And the fifth one is they would need to have a statement from the board. Among the 5, the biggest hurdle, I would say, for many companies is actually the statement of the board. In fact, interestingly enough, not because they haven't involved the board, but when you have the board stepping in to say, I sign off on a certain document, it adds a certain weight for the organization and the people who actually reported those numbers. So that actually gives the company greater responsibility and accountability for what they're saying in their report as well. So we're still actually very much in the early stages. I would say by next year, there would see a lot more reports being issued. And it's interesting. It will be interesting to see how companies are going to manage these 5 components. So the new companies who have not reported before, I would say their challenge is the fact that they feel that I've never done this before. How am I going to even start? So it's a little bit of they're just very unfamiliar with what they have to do. And the second feedback we've been getting from companies who have never done it before is the fact that no one has asked them for any of this data. So why do we need to disclose it? I think this is a little bit incorrect, or rather, there are definitely stakeholders asking for information of such. They probably just didn't realize that these issues are related to sustainability. For example, many of your governance issues, are you involved in any corruption practices? Are you taking care of your employees fairly? Are you giving them the right benefits? These are already issues that are related to sustainability, and they have certainly addressed it somewhere in their business before. They just probably haven't reported on it yet. So I would say companies actually probably just need to go through an educative process to really know what exactly they have to report, and before they attempt to even say that, I've never been asked such a thing before. So these are some of the challenges I would face. Now, the companies who have been reporting, they are the ones who I think have a little bit more challenge to make their report, I would say, more aligned with the international standards. These companies who have been reporting for a long time, I would say they know why they're doing so. It's usually because their investors, especially the institutional investors like the banks and the Bloombergs and the Morgan Stanleys of the world, are asking for such data. It is actually not uncommon to hear that the people who are asking for such data usually come from the US or or Europe, because they are the ones who are more inclined to want to understand the long-term approach a company takes with regards to managing its business. So when you're looking at your risk profile, you don't just factor in financial risk, you factor in lots of other environmental risks, social risks, and things like that. So when they're looking at the balance sheet of company, they're also looking at many other things that would obviously fall into the bucket of decisions that they will make at the end of the day. So I think for them, the challenge is to really make it alongside the international companies. I think disclosure helps, especially when it comes to actually knowing where you stand when it comes to progress. So for example, when a palm oil company says that it wants to have 100% traceability by year 2020 or 2025, you can't exactly make such claims without even knowing what you're doing. Or yeah, exactly, and the fact that you're already disclosing. So disclosure would help a company know its progress and how it's doing year on year, I would say. So that would be one benefit for a company. Obviously, the other thing would be that when you have more transparent disclosure, especially when you disclose against international frameworks or standards, your access to capital and trust from your key funders, your key creditors, your investors is inevitably going to help your business as well, because they would finally buy into what you are doing, and they understand your challenges, and they probably would be helping you to also address some of these challenges. There are obviously other things as well. For example, you would know what your risks and opportunities are when you disclose, because that's part of the framework in reporting, and that helps them to even plan their scenarios 5 or 10 years down the road.